Peter Eliades with you, Stock Market Cycles Update for Tuesday, February 18th. Friday's update was indeed very long, and hopefully this one will be relatively short. Let's begin by showing you this trend line that so far has ruled, but of course it's been a very short time since we hit it, so you can't claim any great success with a trend line. For those of you that are watching for the first time, the trend line goes all the way back to one of two starting points. The first one, with the red line, goes back to the March of '09 low. This is a daily chart on the S&P 500 cash index. The second one, the green one, starts slightly differently after the high in March of 2012. So those two lines follow each other very, very closely over long periods of time up until the present. So though I gave you the first anchors, one of them was March of '09, the green line was March of 2012. The second anchors are both the same, the January of 2018 high. That's a very important high because we had a very big acceleration into that emotional top that we saw in January of 18. So here we are, after having made the market's peregrinations up and down from that January of 18 high, finally back to the line again a couple of years later. And let's zoom in on this so you can see where we stand. The red line, that's the one that started in March of '09, got a little tiny bit above. The green line, almost nothing above. I think that was less than 1 point up here. So it has stopped at the trend lines so far. Nothing says it can't go back up to them. If it's going to be bearish for the short to intermediate term, should not get significantly above them. And by significantly above them, I mean by more than 0.5 to 1%. So right now, they have been stopped by those trend lines. The next thing we're going to show you is the closing price projections for the New York Composite Index. Now, we got one of the short-term downside projections today for the New York Composite, and that calls for, on a closing basis, 13,954 and 13,987. Let's call it 88. So let's round these off, 13,955 to 13,988. Now, this did not get enough below that second offset, or I would call this a secure, good confidence projection as yet. It was really, really close, as you can see, getting below this second offset line. But for now, on a technical basis, these are the downside projections, just a little bit lower than we closed at today. Let's look at the next longer offset. And by the way, this one's interesting because this one offered a higher projection to 14,212 to 14,382, and we came very close today to invalidating it. If we do invalidate this projection, that would be a good sign for the bears, because maybe the even longer nominal 5-week, which we'll show you in a second, might be invalidated too. So as you can see, this is important what happens in the next day or two with this. The light blue line is the closing price. The black and red lines are the offsets. No projection given to the downside. As of the close, these upside projections remain in effect. The next longer one is perhaps the most interesting one for us, because that one is fairly significantly higher. And we point that out to you last week, as we said that we were looking for all the S&P projections, at least on a minimal basis, to have been met. And we pointed out that the New York Composite had not met this projection up to 14,448, let's say, and 14,593. Both of those rounded off, of course. So that projection, this is important because if we get below this line in the next few days, that upside projection will be invalidated and there will be no higher projections. I don't think the next longer offset is that important. We almost exactly met this upper window of the projection, and we gave an upside projection which has been invalidated. So the next longer offsets, these are the 5-week offsets for nominal 10-week projections, are not in effect right now. There's no great information being given there. Okay, what I'm going to do now is something a little different. I'm going to show you one of my spreadsheets, and it's kind of a show-offy thing in a way, but I just want to show you when you talk about market research, these are the number of days we have in this spreadsheet. We have longer spreadsheets than this, but we have 20,651 trading days through today, which takes you back to, I'll scroll back here so you can see the research. This is the 2013, 27, 2000, 1991, 1985, 1978, 1965, 1950, 1940. The spreadsheet begins at 1940, January 2nd. Some of our spreadsheets go back to the mid-1920s. We show you that for one reason, and that's to show you that we have done a lot of research in the market, and we like to look at market history, because if you don't have a concept of what's taken place in the past, it's hard for you to fit in what's happening in the present. I should ask you, don't make the mistake of thinking that the length of the experience with market history, technical history, equates with acuity of analysis ability. But if you're not acquainted with long-term history, your odds of being good at long-term analysis suffer greatly. So the reason I'm showing you this chart right now is that the trading index moving averages have not displayed overbought conditions, and that's a little troubling if you want to have a short-term bearish outlook. This is the 10-day trend right here, and it goes back to the beginning of the year right here, January 2nd. We have not had, since January 2nd, a 10-day trading index reading or ARMS index below 1. I mean, in order to get overbought, if you consider it to have switched around to a bear market, even in a bear market, overbought is around a 0.9 on the 10-day trading index, and we haven't seen anything like that. We've come down from very high readings around 143, 144 at the end of January, beginning of February, but we've only come down to the 110 level recently. That argues that we have not seen even a short-term top here. So one other point, though. Look at all the trading index headings I have here. 10-day, exponential 10, 40-day, exponential 40, open 30, the average of the new 5 and the new 10, the new 5 and the new 10. I mean, I've got more trading indexes than Carter has little liver pills. They're helpful in getting the long-term picture. Now, the only thing that you can say is potentially short-term bearish here is what I call the new 5 and the new 10, and I'm not going into the explanation of those now, but the new 5 and the new 10 trend average has come down as low as 0.69 a couple of days ago. That's a relatively very low reading, and that does indicate an overbought nature for the market. That closed today at 0.78, so still the 0.80 kind of magic demarcation mark. So there are some contradictions, shall we say, in the short-term trading index things. The historically classic trading index readings have not displayed overbought action as yet, though. Okay, the very last thing we're going to look at quickly here are the Globex projections, because obviously the market trades right through the afternoon and the evening, and we'd like to be able to show you what's going on there and any perceptions that we can get. This is Globex projections. This shows all the Globex. It's a 45-minute chart. Now, let's take a look at how accurate just this one aspect has been. Gave an downside projection here, boom, that was the bottom. Gave an upside projection here, well, you went a tiny bit above it with this one bar here, but that was it for the top. Gave a downside projection here, boom, that was it for the bottom. And now it's very interesting because we're getting an upside projection. Now, I don't know if this is continued through the evening tonight, but in order to invalidate this upside projection, which calls for 33.90 at least, up to as high as 33.98, you'd need to get below these two lines overnight. By 6 o'clock tomorrow, you'd have to be below, that's in the morning, Pacific time, 9 o'clock Eastern time, you'd have to be below this 33, 65, 66 level. So if that doesn't happen, then we do have a projection back to the old highs again. That wouldn't be completely surprising because it takes you back up to that trend line that we showed you. So that's it. We've seen some very interesting things over the last couple of days coming into today. A nice turnaround today right at those trend lines. Let's see what kind of effect those trend lines have on the market. Thanks a lot for watching. If you haven't subscribed yet, please subscribe. Bottom right of your screen, click on the little banner. Once you do that, click on the bell. You'll be notified of all our updates. Thanks a lot for watching.